All right, so this will be. I'm gonna just kind of break down price from last Thursday and Friday, specifically last Friday. Um, I kind of stayed away from price, but just because of my pre-existing belief about the NFP, right, which I need to lose, which is honestly not a good thing. But I just want to point a few things out, just to keep reiterating the consistency in what we're doing, the objectivity in what we're doing. It's a very beautiful thing when we can wake up each and every day and look for the same signatures in price, right? Which I'm gonna show you guys here. So here's Thursday, S&P 500, right? So of course we have S&P right now. It's bearish, right? And we've been calling this move for the longest, right? We were stating that we were gonna come and sweep these highs. Reason being is because here's your dealing range here, right? Remember, dealing range is defined by a sweep of a high and a low, right? Sweep of the highs, sweep of the lows here. So this will be the dealing range, right? And of course, you study that range, and then inside this range, we had a weekly fair value gap with equal highs. So once price took that, this is what fueled the reprice lower, right? And ultimately, we should be coming and attacking these lows, all right? But just moving to last week's price action. Turn this down. Moving to last week's price action, um, or last Thursday and Friday, right? We had price come in and let's look at it from the daily chart. Come in and run this previous day's low, 4 hour, right? Big fair value gap or liquidity void. And then once price tapped inside of that, which was this day here, Thursday, we see it tap inside on Thursday. And just to kind of show you guys the entries of how we could have took entries from this level, right? So we tap inside on Thursday, and then we kind of get into here, right? And then we kind of create a dealing range within inside of this, right? So basically, this would be, let's actually do this: dealing range low, dealing range high, right? Or the range going high, and then price sweeps, right? Dealing range low, dealing range high, and then it comes back inside the range. Okay. Now this low here is swept, right? So most SMC traders would take this as an IFC, which they call it, but we're focused on the fair value gap, right? Once price. So when I say it's on an 8-minute chart, where you can, okay, cool. So 8-minute chart, you can actually see here's that series of candles that we look for, right? Here, right? This is a true order block. Here's the once this candle was traded through, right? The high of this dark candle is traded through, it solidifies the true OB, right? As long as we have a fair value gap inside, right? So now on this view here with this chart, you have this fair value gap and this one. So if anybody asks, well, which one do I trade, right? Well, you're here to make money. So the more obvious one it would be this. Now you could be aggressive and say, hey, I'm gonna wait until it comes here. But I'd rather be conservative and just get my entry, And of course, you open up a little more risk on the trade, or you lower the risk reward rather. But I mean, a 1 to 2, 1 to 3, that's highly probable. Like this here is very important, right? And so what you should see is this fractal form. I want you guys to start paying attention to how price, right, will form these fractals, right? And what I mean by fractal is you'll literally see this same kind of signature in price, the same pattern where price creates a low, a short-term low, right, first, and then it here this, I guess this would kind of be possibly your early buyers. We take those guys out, intermediate term low, and then you should anticipate the other short-term low forming, right, which it forms here. Okay, this area also sweeps sell side liquidity. And most of this is explained in the video session, day 1 video that I'm going to drop in the chat. And then we sweep here, a series of down close candles. We sweep this low, and then we expand, right? Price displaces upward, and then here's the fair value gap for entries. Stops will go here, and then you'd be targeting this fair value gap up here. So if we push to a daily, right? 4 hour. Okay, yeah. So you have a slight imbalance up here, but this would be equal highs. So you'd be targeting these equal highs here, right? So price pushes up. We also have a fair value gap here. Okay. So let's just play it out. So here's Friday. NFP. All right, cool. All right. So here we are. Right here. Right. This high is swept. These equal highs are swept. From there, if we understand that, in order to reprice lower, you have to take buy side. In order to reprice higher, we have to take sell side. So now we're looking for that same signature in price. Okay, cool. Once that low is taken, the low of this candle here, right? And why am I focused on the low of that candle? Because this is your series of closed candles, right? True order block. Actually, I can draw that better. Right. Now, price displaces beyond that level. So once we get this body closure, here is our fair value gap. Boom. As soon as price trades back into it, then we take entries, and then you see that high is never taken, right? All right, so that was S&P. Let's look at JER 40. I just recently started paying attention to JER 40. I became a fan of indices, right? So 4-hour chart on Friday. Okay, cool. Let's come back to this point. All right. So, what the premises behind this trader? Here's the narrative, right? We've taken buy sell side liquidity. So here's Monday's low. This is the intra-week low, right? We run down and we sweep that low, and then you see this market structural shift right here. Boom. Okay. Now, in the 4-hour time frame, so this is our market structural shift, from a 4-hour break of market structure, right? But you don't really hear me talking about market structure as much because it's not really in the normal manner that most people, or the more common manner. But here's our 4-hour fair value gap. Okay. So price, right, trades down into the FVG, right? So short-term low, intermediate-term low, right? We completely fill that fair value gap. So here's short-term low here, intermediate-term low, right? Now, entries on this could have been taken from this true order block. See, series of down closed candles, and maybe you see more candles on the 10-minute. Series of down closed candles, up move, and then here's the fair value gap inside of here, right? And that's what price pushes to. So we'd be focusing on that. This is where the candle is traded through, right? Right here. But you see, as you see, price never really mitigated this this order block. So this was fresh. You had this short-term low, then you had these lows here. Price taps inside, we push away, right? We have another market structural shift here. So once you get this market structural shift here, it's possible that you could find a fair value gap inside of here. I don't know if we get one or not. Yeah, so here we go, right? So as soon as you get that, right, you can literally trade this fair value gap here. Why? Because here's a series of down closed candles. What's significant about it is we actually sweep this low, okay? So we had a sell side sweep here. Here is your series of candles. Here is your fair value gap inside of that series of candles. Okay. And then once you get that market structural shift, right here, then you can literally take the trade here, and then you be wanting to target. Want to say there's equal highs or there's a fair value gap or something up here. Let's see, right? You target this high right in here, or you just target this fair value gap. So probably more probable to target the fair value gap, meaning that we're in a downtrend market and you're trading counter trend, so you want to take lowest hanging fruit. But anyways, back to what we're seeing. 3 minute. Right. I love to use the 3 minute. 3 minute is, to me, honestly, the better time frame. It gives you that middle ground between the 1 and the 5. Sometimes I'm not a huge fan of the 1 minute. It has to be very strict scenarios, but so if you didn't catch this trade here, then watch how this low is swept. So midnight opening price is here, right? So price is continuously jumping below that midnight opening price. Actually, it should be turned on. Yeah, I don't know why it's not turned on. Okay, but anyways, yeah. So we sweep this low, sell side liquidity sweep, and then we have a market structural shift, right? Well, this is that series of down close candles. So as soon as the high is traded through, you can find any fair value gap within this range, right? And you can trade it. So, which it was on the 3 minute. I'm just trying to see if it's on another time frame. Here's a fair value gap here, so you can take that one, right? And you can buy from here, and you would attack. So here we are there, here. You can attack that. But what you could also do is let's see, from here to here, and you can see price reaches exactly to this point here, right? Yeah, so you can see, right, if this is aligned with a PD array, which it's almost aligned with these equal highs here. 62 is aligned with that high, and then 27 is almost aligned with, which we don't use Asia high, but this is low resistance liquidity here. But you see price makes it to these targets. And let's see if we use another range. If we use this one, right, then we just be taking it to right with this fair value gap. This is where that 1 hour fair value gap begins, and it's even on this time frame too. You can see price gets inside, and we see a reaction. And that the same fair value gap, look how that level, there's sensitivity around that level. Price comes back and then jumps up. Here's another fair value gap continuation entry right off of the top of this high. Right, and see how that aligns with 27% also. Right, so this high aligns with 27%, right? Which is where price comes back, taps there, and then this taps the fair value gap. Pound USD. Pound USD from today, honestly, is what I'll show. Same scenario, right? We sweep Asia low here. Sweep Asia low, right? As soon as we clear the high of this candle here, bingo. Okay. This here is your fair value gap, which price trades back into. Same shit, every single trade. Right? Trades back into the fair value gap, and even on a 30 minute, or is it the 1 hour? Yeah. Same idea. Series of down close candles. Here's the high. within the range of that series of down closed candles. And of course, this is the high, right? What does the price do? Price trades back into it. And then I would anticipate them coming, somewhere between here as the target. And you can use your fib. See if we take the bodies in this case. Yeah, so 27.62 is in line with previous day's true day open. Okay. Yeah. Let's see if we take the lower portion. I just kind of play around with this to see, what aligns. All right, so that's pound USD from today. This is the pound from the previous day, which was Friday. Euro from previous day. So here's what I'm talking about, using those fair value gaps as basically prioritizing those fair value gaps, right? The higher time frame, and then basically trading from those areas. So here's a 4-hour FEG, right? 4 hours bearish. We had a break in market structure here. Market structure shift here. You see the fractal, right? Short term, intermediate term, short term. And then from a bigger standpoint, short term, intermediate term, and then this would be the other short term, right? And then pushing here, once price, actually let's go to an hour, right? So here is a series of up close candles, right? This would be your true OB here. Everything is balanced here, so I don't per se see price running above. We had equal lows all down here, so it's pretty clear that we were going to run here, and that's why we have this opening gap, because price was destined to run those lows. We just didn't have time on Friday. But just to kind of figure out the trade once we get in here, right? Price pushes up again, and then one more drive higher, right? So we push inside of this fair value gap, which is inside of this range. And if we come down to a lower time frame to see if we can find entries. Okay, let me move this out of the way. Right away is right here. So you see a series of up close candles. Once the low of this candle is cleared, right, this becomes our entry. And then this is happening kind of a little late in the day, noon, which I'm not really high on trading beyond 11:30, but it's the signature is there, so I'm not saying I would or wouldn't take this trade. Just point out the fact that I'm typically not looking to trade, especially not noon on a Friday, right? But anyway, series of up close candles as we sweep these equal highs. So they engineer equal highs here, right? And then we make one higher, right? So look at the fractal: short term high, intermediate, and then the short term high forms. It manifests as we enter the market, and then you see a drop, right? Here's even a fractal inside of a fractal, right? Series of up close candles. Once the low is cleared, okay, then now you can literally trade this fair value gap here. Okay, so this is a fairy swing. So you have a sweep, price makes another run up, and then you get a fairy swing. But now once it cleared here, you never got a chance to re-enter the market. That's that. And gold. Just kind of want to point out what I like about gold. Honestly, gold and oil right now. So what I like about gold, right, is that we're nearing this breaker, where we've tapped into this breaker, right? The bodies of this breaker. Here's that hard time frame fair value gap in the downtrending market, and then here's our near term target, right? Equal lows. So I think gold is probably the better scenario this week in terms of beginning of the week. But what I like to see, of course, today is a bank holiday. I'm not trading. But what I like to see is, right now we're creating this short term high. What I like to see us run that short term high and completely fill this fair value gap in. It doesn't have to fill it in. Ultimately I want to see them run this previous day high buy side liquidity. Yeah, and then maybe we find entries to come back and attack this. Right, all of this will be taken out. Oil kind of has the same scenario, but oil has some pretty nice shorting opportunities from the previous week. Right, so look, we just run this Asia high. I think we ran it. Yeah, we did run it. Asia high is right there. So we run the Asia high, right? And then from there we just find reason to enter. So on this, even I'm just, the reason I'm stopping is because I'm looking at this area here, because we could say, okay, there's a series of candles clear to low, right? When you trade this fair value gap, yes, and I would place my stop above here. But even if you didn't necessarily trust that, and the reason I would trust is because I have equal lows down here and everything. So I'll be looking to short back to those equal lows. But I would trade as soon as I start to seeing this, right? And then this again, I'll be looking to trade that area. I'm not sure what happens on the lower time frame. But you guys should already be seeing it. Here's the series of closed candles. What I like about this is that we actually took liquidity, and then price drops. So yeah, you can just scan the time frame, any time frame on this, and trade a fair value gap. But this has one inside of it, so this is solidified as a true OB, right? And you can see price does not negate this area. I want to say on a 10-minute, yeah. So here's another one here that forms. This is what led to the clearing of those lows, and then price gets inside of here, and then it drops off. So all the time frames here. All right, so you guys, you should basically see where I'm going with this. But what I wanted to point out on the oil is that we're pushing into this FEG, right? So downtrend in market, up close candles should be respected. So I'm not seeing price violate this candle at all, right? Because what I think we're headed to is, I think we're being pulled to the rest of this FEG. There's literally nothing above here, right? Because the fair value gap is always going to be first. So there's literally nothing above here that price should need to pull to, right? It already has previous day's highs to be run. So this should be enough of a liquidity grab to see us reprice lower. And we have equal lows down below. Right, but we've taken that. Let's see if there's an entry criteria here. Well, that was taken at a terrible part of the day. Taken in lineup, so we wouldn't be looking to trade that. Yeah, right. Scratch that. But yeah, so biggest thing about oil is that we're pushing into this fair value gap, and then here's a true order block, right? So I don't see this area being violated. It's kind of the same scenario as gold, honestly, with the equal highs. And just taking these equal highs out. So I'll be looking to see if gold can trade down from this area here. We're at a premium. All right, so very overbought. Tapping inside of this fair value gap. I'm just paying attention. What I'm paying attention to now is how the bodies are respecting this fair value gap here. So it's just something to pay attention to. Okay. So what I do expect is, I'd like to see us reprice lower, but I don't know what we're gonna get in reference to time, because we still have a whole London, Asia, and next New York session. So I don't know if time will be on our side, but we'll keep watching it. Yeah, I think that's about it. And of course, these gaps are all getting filled. Here's New Zealand USD, series of down close candles, and then here's a very slight fair value gap between those two candles. I was looking at this area here, where price didn't get all the way in there, but it came close at the opening of the week. But this would be a highly probable area to probably go long from. The only thing is that we've already taken buy side, so maybe price may just reprice lower, continue repricing lower. But that's all I got for today. We'll be back at it tomorrow, and we'll see what the rest of today's price action gives.